Making money moves. How profitable is the Federal Reserve Bank? Hey there. Are you curious about the Federal Reserve Bank's profitability? As the heartbeat of America's financial system, the Fed has a crucial responsibility to keep the economy stable. One aspect that often sparks debate is its profitability. So, grab some popcorn and get ready to join us as we dive deep into the question, how profitable is the Federal Reserve Bank? In this video, we'll explore the nitty-gritty of the Fed's financial performance, what makes it profitable, and how its profits are distributed. So, sit back, relax, and let's uncover the mysteries behind the Fed's profitability. Definition of profitability. Before we get too deep into the nitty-gritty of the Federal Reserve Bank's profitability, let's make sure we're all on the same page. So, what exactly do we mean by profitability? In simple terms, profitability refers to the amount of money a business or organization earns after subtracting its expenses. For the Federal Reserve Bank, this means taking into account all the money the bank brings in through interest, fees, and other sources, and subtracting its operating expenses. But why does the Fed's profitability matter? Well, for one, it's a good indicator of how well the bank is managing its finances. Just like any other business or organization, the Fed needs to earn enough money to cover its expenses and make investments for the future. If the Fed consistently operated at a loss, it could be a sign of a deeper financial problem. On the other hand, when the Fed is profitable, it can be a sign of a healthy economy. If the Fed is earning more money than it spends on its operations, it means that the banks and financial institutions it regulates are also doing well. And when the financial sector is healthy, it's more likely that the overall economy is thriving. But let's be real, numbers and finance jargon can be a bit dry. So let's put it in terms that we can all relate to. Pizza. Imagine you're running a pizza joint. You make money by selling pizzas, but you also have expenses like rent, utilities, and ingredients. If you sell enough pizzas to cover your expenses and still have money left over, that's your profit. Similarly, the Federal Reserve Bank earns money through its various activities, like holding government bonds and charging interest on loans. It also has operating expenses, like paying its employees and maintaining its facilities. If the Fed brings in more money than it spends, that's its profit. And just like a profitable pizza joint can use its profits to expand its business, the Federal Reserve Bank can use its profits to support its operations and invest in the economy. So next time you're enjoying a delicious slice of pizza, remember that profitability is important for all kinds of businesses, even the Federal Reserve Bank. Income sources. Now that we have a better understanding of what we mean by profitability, let's take a closer look at where the Federal Reserve Bank's income comes from. One of the Fed's primary sources of income is the interest it charges on loans to banks. You might be thinking, wait, the Fed loans money to banks? Yep, that's right. During times of financial stress or crisis, the Fed can lend money to banks and other financial institutions to keep them afloat. And just like any other lender, the Fed charges interest on these loans. Another way the Fed earns income is through its holding of government securities. The Fed holds a massive portfolio of government bonds and mortgage-backed securities, which earn interest over time. So while the Fed is technically a government entity, it operates much like a large investment firm. In addition to interest income, the Fed also charges fees for various services it provides. For example, banks must pay a fee to have their checks cleared through the Federal Reserve System. The Fed also charges fees for wire transfers and other financial transactions. So, in summary, the Federal Reserve Bank earns income from a variety of sources, including interest on loans to banks, revenue generated from security holdings, and fees for services like check clearing and wire transfers. But why does this all matter? Well, the Fed's income is important because it helps fund the bank's operations and supports its role in stabilizing the economy. When the Fed is earning money, it has more resources to invest in programs and initiatives that can benefit the economy as a whole. And let's be real, who doesn't love money? So the next time you're in need of some cash, remember that the Federal Reserve Bank is working hard to keep the economy running smoothly and earning a pretty penny in the process. Expenses. Like any organization, the Federal Reserve Bank incurs expenses in the course of its operations. These expenses include the cost of printing money, running its offices, and paying its employees. The cost of these expenses has also changed over time, but let's be real, running a central bank isn't cheap. Have you ever wondered how much it costs to print all those dollar bills? Well, the Federal Reserve Bank is responsible for printing and distributing currency throughout the country, and it's a costly endeavor. In fact, in 2020 alone, the Fed spent over $800 million on printing costs. That's a lot of paper. In addition to printing money, the Fed also has to pay for its offices and facilities. The Fed has 12 regional branches throughout the country, each with its own set of buildings, staff, and equipment. From Boston to San Francisco, these branches are responsible for carrying out the Fed's operations in their respective regions. And let's not forget about the Fed's headquarters in Washington, D.C., which is a massive complex of buildings that houses over 2,000 employees. With all that real estate and infrastructure to maintain, it's no wonder the Fed's operating expenses can add up quickly. And of course, the Fed wouldn't be able to carry out its important work without its talented and dedicated staff. From economists and analysts to IT specialists and security guards, the Fed employs thousands of people across the country. And like any employer, the Fed has to pay these employees competitive salaries and benefits to attract and retain top talent. So, while the Fed may not be a profit-driven entity like a pizza joint or a tech startup, it still has to spend money to keep its operations running smoothly. But don't worry, the Fed's expenses are carefully managed to ensure that they don't exceed its income. After all, the goal is to be profitable. And when the Fed is profitable, it can continue to support the financial sector and promote economic growth for all. So the next time you're admiring a crisp new $20 bill, remember that it takes a lot of time, money, and hard work to keep our monetary system running smoothly, and the Federal Reserve Bank is at the center of it all. Net income. Net income is the money left over after all expenses have been paid. It's like the cherry on top of a sundae or the sprinkles on a cupcake, the sweet reward for all the hard work. And the Federal Reserve Bank has certainly been earning some sweet rewards in recent years. In fact, the Fed's net income has been so substantial that it could make even the most successful entrepreneurs green with envy. We're talking billions of dollars in profits, people. That's enough dough to buy a small island or a fleet of yachts. So, how does the Fed generate all this cash? Well, as we mentioned earlier, the bank earns money through a variety of sources, like charging interest on loans to banks and holding government securities. But it's not just the amount of money coming in that matters, it's also the amount going out. The Fed is known for being pretty savvy when it comes to managing its expenses. After all, it's a bank, so it knows a thing or two about budgeting. By keeping its expenses under control, the Fed is able to maximize its net income and invest more money back into the economy. Of course, generating a large net income isn't just about making money, it's also about managing risk. Just like any other investor, the Federal Reserve Bank needs to balance the potential rewards of its investments and the potential risks. By carefully managing its portfolio and staying on top of economic trends, the Fed is able to minimize its risks and generate a healthy net income. So, the next time you're wondering where all that money in your wallet comes from, just remember, the Federal Reserve Bank is working hard to keep the economy running smoothly and generating some serious dough in the process. Distribution of profits. So, you may be wondering, what does the US Treasury do with all that money? Well, the funds are used to support various government programs and initiatives, like funding education, healthcare, and infrastructure projects. Basically, the money helps keep the country running smoothly. But wait, there's more. The Federal Reserve Bank also has a unique structure that allows for its member banks to receive a dividend on their investments in the Fed. This dividend is typically around 6% per year and is paid out to member banks based on their capital investment in the Fed. So, not only is the Fed generating profits for the US Treasury, but it's also providing a return on investments for its member banks. In summary, the Federal Reserve Bank's profitability is a key indicator of its financial health and the health of the overall economy. By generating profits through interest income, security holdings, and service fees, the Fed is able to support its operations and invest in programs that benefit the country. And through its unique structure, the Fed is able to provide a return on investment for its member banks and distribute profits to the US Treasury. So the next time you hear of someone talking about the Fed's profitability, you'll know exactly what they're talking about and why it matters. Criticisms of profitability. While some people criticize the profitability of the Federal Reserve Bank, it's important to understand both sides of the argument. Yes, it's true that some people believe that the Fed should not be making a profit at all and that its operations should be entirely non-profit. However, this is not a widely held view. Many experts argue that the Fed's profitability is necessary for its financial independence and its ability to carry out its mandate. Without this financial independence, the Fed could be subject to political pressure, which could harm its ability to make decisions that are in the best interest of the economy. Moreover, the requirement that the Fed distributes its profits to the Treasury has important benefits for the federal government's budget. The profits generated by the Fed are a valuable source of revenue for the government and help to offset other budgetary expenses. In summary, while there may be valid criticisms of the Fed's profitability, it's important to recognize that there are also strong arguments in favor of it. Ultimately, the goal of the Fed's operations is to support the stability and growth of the economy, and its financial independence and profitability play an important role in achieving that goal. The Federal Reserve Bank is profitable, generating significant income through a variety of sources. However, some critics argue that profitability is problematic. Despite these criticisms, the requirement that the Fed distribute its profits to the U.S. Treasury each year helps ensure that the profits benefit the broader economy and society. Overall, the Fed's profitability is an essential aspect to its operations, enabling it to carry out its mandate and maintain financial stability. Thank you for watching this video. Do you think the Federal Reserve Bank should be profitable? Please let us know in the comments. Don't forget to subscribe to our YouTube channel and hit the like button if you found this video informative.